Okay. All right, everyone. Thank you, Matt, for joining. Appreciate you. Let's go, let's go. Ready. All right, so let's see. All right, guys. How are we doing today? I feel something big is about to happen. Huh? Like I say that all the time. But it's true though. It's true. It's calm before the storm type thing. But I'm gonna try to remain calm. You know, until something more exciting to come. All right, so let's talk about GME, of course. The main topic of today. Trading at 23.29. Obviously, it's very low, very low. Low volume, low interest, seemingly, right? Who cares about GME? That's what people would say. The news is pretty muted on GME for some reason. And we know why. It's the same narrative, the same thing. That GME is just buying some Bitcoin and not doing anything with the cash and all that stuff, and all they're doing is just piling cash. Cash is it's not valuable for these people for some reason. Remember when they say we're never ever going to be cutting ourselves to profitability? Well, we did. We proved them otherwise. They said that we're not operationally profitable. We are. Depends on what year. What time frame you are looking at. So again, different perspective, right? And I'm sure the market takes some time to come to that conclusion. And perhaps this is true when that people are not really paying attention to GameStop, or at the very least, that's the appearance of the stock price not moving quickly enough for people. Okay, so I know a lot of people probably would tell you, well, that's the true reason. Otherwise it would have been blown up already. But I know remember what the hell kind of phrasing is that? um I remember, a lot of people that are not, I guess, enthusiastic enough about, trading and all that stuff. Which is, again, okay, here's my point of view. Okay, I feel that traders are important for this stock to run. Without trading, you won't be able to, and again, this is algorithm based. So now institution is important too. Like institutional ownership is very important on this as well. So again, hold on one second. Let me close the door real quick before I move on. I feel 1 second. All right. So anyway, so as I was saying, I feel like the price action is really complicated, right? Now, to me, it's not that complicated because it's based on algorithm. However, it's more complex in this company because again, you have so many participants out there. Okay, you have market maker who try to keep it down so many time, and here's a reason. The way in which they are doing that or able to do that. You're telling me that this stock, okay, is trading like a penny stock at this moment because the volume is not there, okay, and it's been like that historically for a long time. If you look at the down here, right? So today you see like close to 70% of the trading volume today went to the dog pool or whatever off exchange, and it's been like that for quite some time. More than 50% are off exchange. Of course, the appearance is that nobody is paying attention. And look at this one, even 99 point percentage. And yes, this is in percentage, by the way. You look at the volume, yes. So look at this. 90 million shares was traded off exchange. What? It's crazy, huh? Right? I know in terms of percentage, it's only like, oh, it's only 50%. 50% translate to 90 million? Huh? It's crazy, right? I don't know. Maybe it's the typo. It's a typo. Who knows? But my point is again, you guys, like, but, okay. That doesn't mean it's gonna stay here forever until the end of time. No, I truly believe that the institutional ownership, moving forward is going to exceed, like 60% in a few short quarters here. Okay. I don't think you have to wait until, I don't know, 5 years for the convertible note to convert or to be able to convert in order to see that institutional ownership being higher than that. And here's the reason why you want institution to be owning this, right? Because typically these fund managers, these people who are, rubbing shoulder together, they typically don't recommend anything that the institutional not own the most of, okay? And so they don't want to recommend it to their clients, the rich clients out there, to, put a certain percentage in a certain company, allocating towards something that they don't own the most of because they cannot run the price up that way. So typically, anytime they want to accumulate anything more than 100 million shares, tens of millions of shares, they typically will drive the volume down, drive the price down to fill their orders, right? Who would have the ability to trade off exchange? Have you ever thought of that? Institution, not retail. Not you selling 1, 2, 3 shares here and there, just to do whatever. One contract here and there. Like it's not going to move until these people are already like, okay, now we have enough, Jimmy, to move forward with that. And the only way for that to happen is to build a company that is profitable, have balance sheets to support those millions and millions and billions of people, billions of dollar to pour into the company, right? And again, that's why dilution happened. Convertible notes, however many demands out there. So apparently we have more money. I mean, I feel like the float right now. No. What are we trading at? Market cap wise. Okay. Leroy. Okay. No, we're not wrong. I really feel the same way. Because AMC is YouTuber keeping spending, spewing. Okay, I share every day. What are they afraid of? I have no idea. I mean, AMC, we all know what AMC is. Hopefully, people are not falling for that still. But again, they're going to drive it. The media is going to pin them two together with no shame, of these people. Again, I'm telling you, the news medias will always be late to the game when it comes to GME. They're not going to cover it. They're not going to make any sense out of what happened in the company. They will always says memes, memes, meme. It's always like that, right? And we understand how the lingo in which they're using to describe GME. So nothing new here. But again, I'm telling you, people need to look into, these type of thing where, to see when they say, well, nobody pay attention to GME, nobody trading it, nobody cares. I want you to see this with your own eyes, okay? Unless this is a typo, I don't know. I feel like it's not. Because again, you have a convertible notes coming in, announcing convertible notes, and then all of a sudden, boom, right? 90 million shares in the dark pool, pop out of nowhere. I highly doubt that every single retail out there, they're just like, oh, there you go, I'm done. I'm going to sell it here. But it could happen. It could happen. Maybe people are fed up and all that stuff. But again, that's on them, right? If they're willing to sell GME at whatever price, before the convertible notes, which is 727, 28 or something like that, then it's their loss, right? Because I mean, in the future, the share will be higher. Yes, you might be so happy right now if you were to sell over here before the drop. Yeah, sure. You make a great decision then, okay, for that short period of time. But for people who are long-term minded, you don't mind, okay? Price fluctuation. I mean, things happen, right? And again, if you sell, that's on you, right? That's, I mean, if you're able to make money off of this, great on you. Congratulations. To me, again, I'm in here for the right reason. So of course, I'm not going to exit out my full position. In hindsight, had I know this would to happen, what is it? 100% at a time, of course, I wish I sell, right? Had I know it's gonna happen that way, it's like, okay, I'll sell at, this right here and then buy back over here. Like, do you actually know that it was gonna happen? Of course not. So again, if I have the foresight to see the future, that would be great. But I would be a billionaire by then, right? So the whole issue is that people don't know. People are not understanding. And of course, what if you sell here and then it's trend the other direction? What then? You're gonna feel so bad because you've been accumulating so much longer. Okay. So my cost average is still at 31 at the moment in my Roth. Of course, I am, trying my best to lower my cost average. Why was it so high? Well, because I went pretty aggressively, over here and over here and over here and over here, thinking that it was gonna, be breaking that wedge of doom or whatever. And then buy and buy and buy, right? And buy a whole bunch over here, right? Didn't have enough money to put in over here. So, but again, I bought a whole bunch over here. But all in all, if I were to combine everything I'm holding right now, my cost average is still higher, which is, a little bit above the convertible or the conversion rate or whatever. I'm not sweating, I'm not saying, I'm not, uh, I'm not worried that it won't come up to that point. Some of us is luckier than other, because when they have lump sums of money, they're able to buy it down here. Okay. Unfortunately, when I had some meaningful amount of capital, I went over here. See what I mean? So again, that's why my cost average is so high, which is okay. Again, you live and you learn. Like I said, if I have the ability to foretell what's going to happen in GME, I would be a billionaire by now. Okay. So, but the whole idea is to be consistent in accumulating. If you want to try to trade in and out, that's on you too. I mean, you live and you learn. And if you think that you could, be a professional and beat the computer, do it, right? I mean, Rowan Kitty can, right? Why not outsmart computer too? But anyway, I don't know. Like, that's the extreme example. High volume is multiple operations with one share. Yeah, I'm sure. Yeah, I mean, like high frequencies trading, ping ponging one share at a time. And it happens, and unless you are, able to override the algorithm somehow, and it seems, again, buy and hold is the only way to break the algorithm, then yeah, the more people you could recruit, so to speak, to be the buy and hold, yes, I think the critical mass will be reached. But I don't think we're gonna do that in tandem. So, like I said, buy and hold also applies to institution as well, and they are coming. I mean, look at the convertible notes. I mean, they're able to raise $2.2 billion, right? 2.2 or 2.6 actually. This new Greenshoe thing. So with that, you could say that there is a lot of demand in the bond market there, the convertible bond market at a 0% interest rate. That is crazy. It just shows that the demand is out there for these institutions to get some hands on or some exposure to GME shares, Yes, and then they also have the Bitcoin built into it as well. Why would anyone buy into these bonds? Well, we've talked about that before. Why? Because some institution cannot have exposure to stocks like this because they're risky. They're thought as they are thinking that, hey, because of the meme people, right? Because of retail, it's volatile. And it's unpredictable, but if they are offering, at least some sort of guarantee, and this is what it is, like the convertible notes is a guarantee that you will get your money back no matter what. Yes, you will earn 0% on it, but in 5 years, you will get your money back or the option to convert into shares. And so you actually protect your downside as an institution, but get to participate in the upside if the convertible rate is reached. You see what I mean? So if the price reach above $30, institution will be able to participate on the upside as well. Meanwhile, their downside is protected. So yes, institution love this type of bond for that reason. And you could argue that, Ryan Cohen is helping these hedge funds out. Well, how do you know who buys them? Do you know for sure that was the shorts? Hedge fund that are shorting this company? I mean, but if you are of the camp that thinking that, hey, there's a lot of shares that is being sold, not yet purchased, in this company in particular, then yeah, you understand why this actually works, even though it's in the form of dilution, so to speak. So again, it's complex for sure, but all you need to know at the moment is that we have close to $9 billion in cash. Okay. And actually, here we go. Let's update this, right? So instead of 225, now it is 7, right? Am I doing the math right? Goodness gracious. I'm telling you, my brain doesn't work anymore, I feel sometimes. You know why? Because I'm hungry. So we'll be eating soon. Okay, for now. No, that's not how it works. See, I don't even. Crazy, huh? Crazy. Okay, so I'm trying to figure out 2.25 plus 0. There we go. Yeah, 7. So 2.7. Give or take because there's some fees involved here. Okay, but round off, $2.7 billion. So technically, they have some debt right here, $4.2 billion in convertible note debt. So it's worth noted there. Because again, because we used to say debt free, not completely true here. So we need to stop saying that. But this debt is 0% interest, which I know for a fact that the media will leave out conveniently. Anytime they mention GameStop having a convertible note, they're going to just say GameStop has $4 billion in debt and, not doing anything much. The revenue is declined. Leadership is not using that cash for anything, right? Whatever, the spin. So understand that. So now we have $4.2 billion in convertible note at 0%. Okay, so let me see. Oh, okay. Just that little thing turning red. Okay, let's just box this out because now it's dead. So let's minus that. Okay. Now, just because it's dead doesn't mean that you get to subtract out of this. And say that, oh, now the shareholder equity is only, 6 point something. No, five point something. No, because this is cash built in. Okay. Yes, shareholder equity is around 6 billion something. Okay. Well, actually, let's look at it. Rather than guessing, huh? Hold on. I might get that wrong though. I feel like they already gave you a breakdown of. Okay, hold on. No, is it? Balance sheets? Okay, so asset, now it turns into 9 billion. Okay. Liability, very low. Shareholder equities will be now 5 billion something. Something. Okay, so this is the last earnings report before the second convertible notes. Okay. And see, this is the convertible note reported as debt for the first one. So the next quarter, you would see 4.2 there. Okay. Why 4.2? It's these two right here added together. But then this would be increasing to, at the 2.6 billion there in cash, and then this asset would be 9 point something, right? So yeah, we're creeping up in asset for sure. And yeah, what are we gonna do with it, right? That's always been the frustration, the $1 million question in people's mind and psyche. And I don't know, and I'm okay with that, right? Because again, if the result is beneficial for shareholder, I mean, again, as long as you hold the share for the long term, you would feel that within this dilution, remember, I did some math here, right? Just to give you an idea. Oh, shoot. Let's just say you own 10% over here, okay? Just in case you haven't seen this one. You own 10% and the company is only worth $1 billion. Let's say 1 million, just for easy math here, okay? But then when they dilute that same share, half or whatever, half of the company got diluted, but then they are able to make $9 billion from it, or $9 million. So 9 times. 9 times. So, right, so would you rather own 5% of a $9 million company or 10% of this? I would pick this one, right? Because the money is more. The percentage is less of the company, but the market cap is 9 times that. Okay, so with that, hold on, actually, you see, should I? No, I don't think that's, no, that's me dividing. Okay, so yeah, 9% of 1 million is 100,000. But if you do the same over here, $9 million worth of 5% out of $9 million is much more than this one right here. Right? So when people are complaining about dilution, let them know about this one. Because again, you get more money, less percentage of the company, because the company now is worth more. So the pie, the pizza get bigger in volume. Okay, you get more stuff, more asset, more, dynamic, whatever. Now you have convertible notes. Now you have cash. Now you have Bitcoin. So what are they doing? What are they doing? So that's the mystery. Of course, we could always speculate, but why would you speculate when you could see the goodness that comes out of it here? No other company have done this, and with the company with this small side, quote unquote, nobody's paying attention to it, would be able to raise $4 billion in 10 days. Are you crazy? 4 billion, sorry. Is it 10, 2 something? $2.6 billion in 10 days? No. And the share price is still at like elevated at this price. Come on. So it shows that its strength, it's strong, that people are actually, people, when I said people, I mean institutions, are not worried that they might not get the money back. Okay. At the very least, they are telling you that, okay, GME could survive for 5 years at least. And that $1.5 billion that they was sold to the public, to them right here in the year 2030, will still be there, right? So there's a long way away from bankruptcy. Okay. How can you go bankrupt when the company is making money? You cannot. And not only that, they have piles of cash. You cannot. Okay. You could be frustrated that it's not growing. The pile of cash is not growing at 10x speed. I get that. I'm with you. Okay. But the whole idea is that you want to be pragmatic. You want to be growing into the valuation of the squeeze as well. Okay. I'm saying, okay, I know people are frustrating. It's like, when is it gonna squeeze? When is it gonna squeeze? Don't think of it that way. I'm the way that I'm thinking about this is that, okay, Ryan Cohen does not want to squeeze immediately. It's not that he's intentionally doing that. Yes, he's taking advantage of the volume that comes in, of the demand for the shares, because now, we have the balance sheet to, like I said, we have the balance sheet to support billions and billions of dollars coming into the company. It makes sense now for these people to invest in the company and hold for a long term, because now they see some future here. Okay. Why they see some future? Because they see this pivoting. Okay. Whether it is Bitcoin, whether it is the opportunity to acquire more Bitcoin, because this is the way, I guess. I know. Just like Ryan Cohen was saying on the interview, right? If you're thinking that it is the inflation hedge and that it's going to take over capitalization of gold one day, then that's the thesis, right? Whether it's going to happen or not, time will tell. Only time will tell. But meanwhile, let's put some, Why are they not going all in? Well, because they're not trying to compete with Michael Saylor. Okay, we have our own strategy. We're going to be fine doing that. You could do like I said before, how about just use the interest payment, every single interest payment that that the company can accumulate, just buy into Bitcoin with that, whether it's 5%, whatever, right? Just consistently. Again, you have to be consistent here. Every quarter, let's do that. Let's set a consistent buy on that asset alone, because again, in my opinion, it's going to be the pristine collateral that is going to beat the treasury market as well. Okay, because it's the most form of liquid asset in the world, that you could sell $1 billion worth of Bitcoin and would still be fine. And again, it's liquid, meaning that you could buy and sell anytime you would like. So technically, it's better than the treasury in a sense. But yeah, and then, again, only time will tell. Market cap of golds right now, it's around $14 trillion. So it'd be 7x from here if Bitcoin were to take up that. And that's not only, that's only accounted for, if it take over the capitalization of gold. Not accounted for the hype that is going to come after this either. You've seen a lot of Bitcoin treasury companies out there now that are, popping out everywhere, that, they buy 10 Bitcoin, right? And then their stock price goes up, 10x, something like that. But when GMA buy $1 billion, $500 million worth of Bitcoin, the stock went down 11%. Make it make sense. But again, in my opinion, the trading people, right, is going to pull their hair out, because again, the algorithm is the one that determine, and unfortunately, this is the market structure that you are dealt with or handed into. So that's why, again, I think leadership is trying to do their best to at least make the balance sheet to support those billions of dollars that will come in the future. And again, my point is, maybe the squeeze won't happen this year, next year, or even, I don't know. But I would bet that 10 years from now, Jimmy would be higher than it is today. That's what I'm willing to bet. It was genius to buy Bitcoin from the interest and not from the cash raised. If they are continue to do this DCA, yes, for sure. That's the most sensible and the most conservative. And I kind of kind of predicted that, honestly, because again, or he could surprise everyone and just the next few quarters just gonna be like, okay, 10 billion, boom, done. And then the market's gonna be shocked. It's like, oh, what? They buy $10 billion for the Bitcoin? That's crazy, huh? Okay, strategy core business is losing. What? Oh, yeah, that's true. I was like, I thought you said about Jimmy. Yeah, 1 point, it will have to sell Bitcoin and then Ryan will buy it. Jimmy is probably, of course, yes. I think, again, now with strategy though, I have a bit different thought on that. That accounting of like $1 billion loss, it's because of last accounting practices. Apparently, they were supposed to only account it because of Bitcoin. There was some accounting trick that you have to. It's not a trick. It's just that you have to record it this way, where if you buy a certain asset at that point, like Bitcoin, if you buy it $100,000, right? But throughout that quarter, 3 months, you have to report the lowest value for the coins because you hold that. So so even though, let's say, it jump back to, whatever, $110,000, you have to use the lowest value, which is, I don't know. I didn't read the balance sheet, honestly, but it was around here or something when they report their earnings. And so the lowest value was, 90,000. But you know how, if you see their filing, they were buying Bitcoin over here, they were buying over here, right? Over here, that quarter. And so again, that's why it comes out as a loss like that. So the same way with Jimmy, I think they're smart because they didn't buy it at that reporting window, because they would have had to report their Bitcoin holding at this low price. Okay. Now that the change of accounting to fair market accounting, we are able to, mark to market it. So whatever the quarter ends and the price of Bitcoin, let's say it goes, 130, we get to report that value as 130. Does that make sense? I hope that makes sense. So again, perhaps this is why we wait to, okay, at least now we could account for our Bitcoin that way and that way. It's easier. The next quarter is going to just be Bitcoin valuation, and we'll deal with it, the next quarter. So we know that Jimmy bought Bitcoin somewhere around the 3rd of May, June 10th. So within this time frame. Okay. So we know then that the lowest value at that time frame was 93, and then $111,000. Pretty cool, right? So on average, they're buying it around $100,000 each. Okay. So that means, yes, $500 million worth of Bitcoin is being purchased, roughly. Yes, so the S&P 500, obviously that's still a battle that we have to fight pretty aggressively. But we don't have to sweat it. even if we're not losing anything, we're not burning anything at the moment. So there you go. It's much safer. We have so much runway. Look at that cash flow, guys. Come on, really. people are baffled at the cash flow right there. Remember, they're like, oh look, Jimmy's done 250 negative cash flow. But when it's positive, like 400, nobody talks about it. Is that, well, because of dilutions? Like, duh. Companies will make money any way possible, And again, this is why I tend to, listen to the media out there and notice the difference in which they are covering a certain ATM. Okay, when other companies are raising money and all that stuff, they always frame it as, okay, company do an at market offering, and now they're able to have this much cash and right? Very neutral, very, or depends on who they want to pump, right? Nvidia, and then they would just say, oh, this is a good move on their part, right? But when it comes to GameStop, it's like, oh, it's dilution. It's like, okay. So they always frame it in a terrible light. And we know this, as a investor for 4 years straight on end, you've always hear those type of thing. Now, as far as MicroStrategy, though, the company in of itself, I think people don't really understand. Well, I don't claim to understand more or anything like that. But I really think with the media so quick to judge it as a scam, I'm thinking maybe it's not. Hear me out, because I feel like, okay, you know how we know, in this community, when we are investing in GameStop, right? We know exactly which one is a scam. So I'm going to point out AMC because that's the most, egregious one. And Moran's pointed out the Mullen Automotive. That's also another scam too, right? When the media covers those two companies, do they ever cover it as a scam? Do they ever call it as a scam? No. So when they quick to say certain thing is a scam, is a Ponzi and all that stuff, I tend to look into it myself. Why are they so negative about strategy? Right? And so again, there's so many good contents out there that are talking about that. So I urge people to listen to those people, But again, do your own research as well and make sure that you understand the company from the fundamental sense. And I really think that, when people are saying MicroStrategy is loading debt and they don't understand that they're hitting, I guess they're creating a way for the institution, fixed income earners, to earn based on Bitcoin balance sheets, right? Based on the base layer of balance sheets. I mean, base layer of Bitcoin. Okay, if you believe in Bitcoin and the safety of it, of course you're gonna, invest in their bond, even though it may have some high risk out there. And the reason why I said that is because the bond holders typically, there's so many different type of investor out there that you have to meet them where they are. And so that's what MicroStrategy is trying to do, or MicroStrategy is trying to do, is to design a vehicle for everyone to get into Bitcoin at their own terms. So those stride, those preferred share that people are saying it's a form of debt, it's actually not debt, really. It's a preferred share that if you own that units of shares, you are going to receive 10%, and that 10% will come out of the backing of, the equity market from MSTR, and also the Bitcoin backing there too. Okay. And so long as they have that asset, technically they could pay out 10%, every year. And people would be like, well, how are they going to pay, the original owners? Like, it's crazy to even think that you could, give 10%. To that, I say, the debt market is like a bond market, the way that he was saying it. It was $300 trillion market cap. $300 trillion. So why so much? Well, because these big money, there's active managers and all that stuff. Typically, they want to enjoy, a fixed income. They don't want to worry about, the market fluctuations and all that stuff. As long as they could get some guarantee going, they will buy those instruments, right? Just like the convertible notes that we have in Gamestop, the same exact thing. To where, those people would be more comfortable to, have some exposure in that, right? And they don't realize that, because of the inflation, those things could eat up their purchasing power as well, like some part of it. And so that purchasing power, even though they are able to return 10% a year, if the inflation is 8% a year, technically they only gain 2% over time, every year. But again, because the number is so large to them, they feel comfortable that they are actually moving forward when it's actually not. That's why, the people that own bonds, U.S. Treasury bond, TLT, went down in value so much because, again, money printing, right? The government could just print money to buy their own bonds back. That's terrible. And so eventually, even the U.S. Treasury would have to compete with, MicroStrategy bond, because they convert it into shares. Anyone could go and, buy those and get 10% a year, but eventually that 10% will turn into 8%, 7%, 6%, because now more and more people are flocking into those. So now that the value of that units would go up in price. So instead of buying at $100 today, 10 years from now, it's going to be like $300. It could be, right? Again, just theoretically, if people are chasing that bond. Because the higher the value, the lower the rate, the same way as TLT. But yeah, so MicroStrategy would have that fixed, cost. So technically, they only have to pay 10% of whatever people putting into that bond, or to that units. And then they have tranches too, where, they have the 8% bond with the option to convert or something like that. And then now they have another instrument where they have 10%, but that is like a junk bond type thing, because they won't be obligated to pay it out every single year if they are in trouble, right? Because if they miss a dividend, that's it. That's the risk that you're placing on that dividend. Just like any junk bond out there, you guys, like junk bond that have the companies not making money, right? So those junk bond people are getting paid so much dividends. Some company would pay you 8%, 6%, but then their balance sheet doesn't even have anything, that could have the security of that constant dividend coming. Okay. And very abysmal at that. So that's the market that Michael Saylor is trying to attack. And if people understand the safety of Bitcoin and, understand that it is the most pristine collateral in the future, they will much rather giving money to MicroStrategy or Michael Saylor in order to buy Bitcoin rather than risking these companies going bankrupt, right? And not even getting your principal back, so to speak. Okay. So again, that's just how I understand it to be, and I feel so like fishy when I hear the media, like saying that it's a scam, it's a Ponzi, it's a, it's this and that, right? And so I tend to kind of look the other way. It's like, okay, why are they so quick to judge it is a scam when the true scam is out there and they never warned you ahead of time that this is a scam? See what I mean? They would always like give some clout there. It's like, oh, actually AMC is trying to fix their balance sheets by doing this. Oh, the apes, the equity preferred unit or whatever they created back then, and they were touted as like the best thing ever for the company, right? They were promoted to retail investor, even though we know it is a scam, right? Well, most people anyway. Meanwhile, I feel like that the media is bashing GameStop. They're accumulating, of course, on the surface. Obviously, they have to, because that's their survival, right? They don't want anyone to flock into this company because mostly it's retail, and they don't want retail to win. You know that. But again, not every institution are like that. It's just the handful, few that are not in it. So they are waiting for themselves to at least accumulate, more, for them to be able to, promote it to you, to retail and all that stuff. So it's coming though. They will promote it. Don't get me wrong. They will take some time to accumulate. And in the meanwhile, driving a lot of retail out because of, people are not patient enough, you guys. I'm telling you, even the OGs out there, I'm sure they're still tired. They're already tired already, I'm sure Rowan Kitty's also very frustrated at the way that, you know, perhaps the algorithm is not doing much. But he's a lot more patient, obviously. He's probably been in this company for the last 10 years already and really understand the movement of it and waiting for that opportune moment to strike again. So, who knows, maybe he'll come back. Or if not, I mean, the company's still doing well. I mean, there's no other ifs or buts about it, right? And this thing will continue to go down, and eventually it's going to be what, 10 PA ratio, 10 times PA ratio, then eventually it's going to be 5. Okay, so remember, just a year ago it was 400 PA ratio, right? So now it's down like close to 90% down from that. So just one more year, we're going to be, on our way to less than 10 PE ratio. And even more. I feel good. Hey, Jesus, what's up? I think to buy any. Okay, cool. You should have cash. You should have cash. Yes, everyone should have cash at this moment in time. Yep. Okay, okay, so we're fixing our balance sheet for sure. We are, on our way. Debt to equity, non-existent at this point. It's gonna be increasing a little bit, but we look at the current 8 times. Probably higher now because we have more money. Crazy, huh? Cash flow, oh man, like look at that. Amazingness, huh? Amazing. Okay, there you go. Good. So that's it. That's it. Let me see, what else do I have? I think I was looking up the green shoes thing exercise, and it just refers to like an additional, an extension allotment, after the initial public offering. Um, I thought it was like funny to like green shoes exercise. This is when the underwriter activates the green shoe exercise to purchase these extra shares from the issuing companies. So somebody wants it badly, you know. But again, this might be the long, right? The people that, or people who had no previous interest in buying GME at all. Now they're in it, right? It could be people who's been sitting on the sideline and see some momentum, some potential of the company really pivoting, right? So again, it might not be shorts, you guys. Shorts probably still stupid enough to short it. I mean, look at this, right? I mean, look at the volume. Like, of course, dumb stormtrooper. People are stupid, you guys. Like, you think that people are smart? No. There's stupid people out there in the position of high power. You know that. And the only reason why they're there is because they have so much connection. They have no thoughts of their own. And so if people are telling you GME is a meme stock, they're gonna short it like crazy because they think it's gonna go bankrupt. I don't know. Maybe they're not smart enough that to figure out that GME actually is profitable. They still see no proof. They still see that Ryan Cohen is a doofus. Yeah, I mean, again, a market participant, right? Not all of them are smart. I mean, it could be also too that retail was just so fed up. There you go. And they just use the, off exchange to execute their order, right? I mean, come on. Okay. Card inventory double after first bond. Oh, yeah. The PSA, right? That's pretty cool. Oh, you thank me? What did I do? But thank you for the thank you. Appreciate that. Okay. So let's see what is today or this week. Max Payne. Of course. Dare I say it's going to close at 23.50 this week. Crazy. Again, because it's skewed, it's hundreds of thousands of in the money here. That's why they cannot push it until they're ready. How do you know it's ready? Well, they will buy a whole bunch of calls, sporadically. Who knows? I don't know. What's this? See, like, again, not many people are betting right now. So no wonder it's so dry. Okay, volume on the. Okay, so August 1st is still at 22. Max Payne. Magic. It's magical, actually. Okay, here's another thing too. I feel like the IV is low. It's pretty low. Is there a way to find out on IV? Okay. You don't get that, huh? IV for GameStop. Okay, so if you are an option writer or whatever, this would be the best time for you. Aw, man. I'll do that later. Okay, so there you go. Look at that. I mean, the lowest ever, in my opinion. Okay. So understand that's what it is. And yeah, do it. Do it. I know it's tempting to buy, right? To buy right now. Of course, I still have my two. I haven't add anymore. I feel like, why should I? I feel like, hey, it's very bearish. It's like bearish cross right now. But again, this could turn on a dime too. Okay, so if you have covered call or whatever, this would be the best time to buy back and close. Close your position, because I don't see any way that it's going not to stay this here for long. Especially now they already, complete their offering. So yeah, you guys, this is it. Look at the all-time high for this. Crazy, right? So it's almost like a third. Never seen it this low. So typically the reason why they, crush the IV like this is because they want to buy and spike the price. They have to, right? To try to entice people to lose money on betting up and down. Take the premium and all that stuff. And there you go. But also too, yeah, shareholders gonna, stand to gain a little bit. But again, look. Gap has to be filled, right? So that gap's gonna fill eventually. I think it's soon. Pretty soon. All right, guys, I'm gonna go eat. And yeah, I'm gonna have to edit this one because it shows something I don't want to see. I don't want people to see. Okay. All right, I'll see you when I see you. Thank you so much.